Hello, everyone. Happy Sunday afternoon. How is everyone doing? Good afternoon, Patrick. Good evening, Charles. Hello, Martinez. Happy Sunday, George, into a happier Monday. Hope everybody has a fantastic Monday. Remember, U.S. stocks are closed tomorrow, Martin Luther King Day in the USA. Futures are still open. They will open tonight in just under 2 hours, 5 p.m. Central Time, 5 p.m. And they will close tomorrow. They'll be open during the Asian and European sessions. So because all the European and Asian markets are open, so we need to have the futures open, of course. But they will be closing tomorrow at noon. People go, why do they close at noon? Well, because that takes us through European key closes. So futures can be used for hedging and other things. It takes us through the Asian and European sessions. Europe closes for the day tomorrow because they are open. Then the futures close down shortly afterwards. Then they reopen at the normal time tomorrow night. So we were not going to be going over any stocks today. We're just going to be looking sort of bigger picture at the futures market. I'll probably do a live stream tomorrow afternoon around the same time for if we want to touch on any stocks and just a quick recap to see if anything happened where we have to really adjust things going into Tuesday. So we will have a live stream tomorrow, not for the open, but for the afternoon. So if you'd like to tune into that, you are welcome. Mike says, super spicy. Good evening, Anissa. I always wonder who the really dedicated traders and investors are. It's a very interesting group. So let's see, because if you do your prep, you will be prepared. I guess that's sort of a weird statement. If you do your prep, you will be prepared. So with that, you know what? I'll just have to leave it at that. We got earnings season also. Big. We had it launch on Friday. Banks. You had the beats, but then some guidance lower, but the market just gobbled it all up. It's like Thanksgiving all over again. Let's just gobble it all up and head on higher. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like the mic button. All right. With that, Tuesday, what do we have? I'm going to still cover what releases so we can get our minds wrapped around it this week. Hey, options 22. Yay, falling duck. Exactly. You have to throw it in there sometimes. You have to throw it in there. Keep the mood light, just like some of George's questions for when Bob is on. That last one was very interesting. All right. So, Tuesday, 7:30 in the morning. Empire State Manufacturing Index in contraction. We will be keeping an eye on that. And then we don't have much going on besides Williams' speech, I should say. Hey, could somebody, without me adjusting my calendar, could somebody put up when the bank, if you can also Google it, there's a big Bank of Japan meeting this week. Could you just remind me when that is? I forgot to look it up before I started the live stream. If somebody could just put it in the chat. And why? Because we're running against their peg, and we'll get to that. We'll glance at that quickly. But it could get interesting. Their purchases have been astronomical trying to keep this 50 basis point peg. So that is a potential disruptor to the markets, Bank of Japan, and therefore if you're trading the yen against anything but a yen, especially against the dollar, it could be interesting if something does change this week. Let's see. For Wednesday, we got the PPI. You could get a small reaction to that, but it's not as important as a CPI anymore. We got retail sales. That's what I'm watching more so than the PPI. The PPI is so expected to contract by 0.1%. Previous was 3%. Retail sales, which previously contracted 0.6% or 6 is going to forecast to still contract. The forecast and consensus are sort of wide apart, and if you average them, you get pretty much the previous. So retail sales are expected to drop. So that's coming out all before the open. We got Bostic speaking before the open on Wednesday. We have industrial production, minor stuff, 15 minutes before the open. And then after the open, we have business inventories, the housing market index. And Wednesday afternoon, we have Fed Beige Book, Fed Harker speaking. And after the close, or right at the time of the futures close, we got Fed Logan speaking. So Wednesday is going to be busy. So thank you for putting that in. The 18th, that's what I thought it was. I just didn't want to correct myself by stating something wrong. So thank you. That's the Bank of Japan policy meeting. Do not ignore that on Wednesday. Even if you don't trade currencies, do not ignore that, because that can have a substantial effect on the markets should they have to shift or change the peg once again. It can change stuff going on in the markets. So today was the 7th anniversary of Swiss what, Mike? Of Swiss what? Mike the numbers. So Thursday. Seems like a long way off still, but Philadelphia Fed Manufacturing Index, going to watch for that before the open. And of course, you have your initial claims and continuing claims, which came in better than expected last week. And then we have more Fed speak. Collins speaking. Remember, the next rate hike is on the 1st of February, so roughly 2 weeks away. 2 weeks and a couple days, because it's a Wednesday of that week. And then we have Brainerd and Williams. So we don't get any break from Fed speak. Harker speaking on Friday. Waller speaking on Friday, and Friday's a very light day besides that. You got existing home sales and rig counts. So Friday cleans up the week very nice with nice, no major announcements besides Fed speak. Just a reminder, we've had a lot of junk being bought the last few days. The Goldman Sachs short index is up huge. You had things like, I know they pulled back a bit on Friday, but Carvana, Best Buy, and a lot of junk being bought along with Bitcoin. You can see last week, consumer cyclical and technology were leading, and these are risk assets more so than risk-off assets. Risk-off assets like consumer defensive and healthcare and utilities all the way down here at the bottom. Risk-on stuff, comm services, real estate, technology, consumer cyclical, leading the pack last week. So not much fear in the market right now. 94% for that 25 basis points. I've been saying I think it's going to be 25, but I don't think that finishes them off yet. I think they're going to go 25, 25. I have not looked in at March. Where would we sit with March? Because this will take it to 450 to 475 if it's a 25. And then March is still 78% baked in for another 25 in March. So the market's agreeing. Fantastic. Why are you verifying this right now? All right. Right in the middle of a live stream. They didn't ask me first. So we could get that 25 basis points. And then the odds are the pause for May. That's where we sit. Fear and greed, solidly back to greed mode. I am watching for topping patterns. My theme is trail mode in a bunch of stuff. We've been talking about more and more trail mode. It's still in trail mode. And I'll give you my one key thing I am going to be watching for this week. Current market valuation still mid-sized of the upper fairly valued, strongly overvalued yield curve where Buffett model is fairly valued, but it's up in the top, close to that one standard deviation, overvalued nearly. PE ratio could be tipping back into overvalued mode also, especially with this rally. All right. Hello, Connor. We have earnings. Remember, the banks kicked it off on Friday, along with United Health and a couple other things, but nothing tomorrow, really. Tuesday, Morgan Stanley, Goldman Sachs, biggies. We're going to have to see if that gets shrugged off too, or if some sense starts coming back to the market. After the close, you got United Airlines, my broker right there, one of them, Interactive. And that's about it. But let's see. You got Schwab on Wednesday, PNC on Wednesday, Alcoa, which used to be kicking off the earnings season a long time ago, Discover, and more regional banks. Thursday gets P&G, which I will pay a close attention to, and I would recommend, even if you don't trade it, have no interest in trading it. That gives us somewhat of an outlook on consumer with consumer staples and inflation and some of their expectations. Do not ignore it. And I'm not just talking, look at the headlines. Oh, they beat. No, that you got to sort of dive into what they're saying. You got more regional banks. After the close, we got Netflix on Thursday. And then more regional banks. And Friday, not a ton, but I guess the biggie this week, the biggie for me this week is, besides Morgan Stanley and Goldman Sachs, then the next biggest biggie is P&G, interesting enough. Then I'd put in Netflix in there. So that's where we sit with that. We should be all prepared. And then next week really starts getting into, did Apple and Microsoft finalize their earnings date? I know they're not this week, but they were still up in the air. Were they finalized? Does anybody else have that in? Next week, just putting this out there because this could set the tone, especially for the end of the week. We have a lot going on. The following week. So that it gets into the heart of earnings. All right. Now, I'm still watching, although I did some testing. I want it to close back above the 62.5 on Tuesday. If we just drift higher tonight, I did do some cursory testing with this. And on a limited futures, well, because it's holiday, if we do get a close above a key level, probabilities drop slightly because it can be, especially on very low volume. Thanks. If anybody does see if they were in there or can Google it and throw that in there at some point while I'm rambling on, let me know. I'm interested in Microsoft and Apple. So 433.25, 403.325. I will be paying attention to Tuesday. I will take note if tomorrow at noon Central Time, when the futures close, if it does close above here, but it's going to be percentage points higher on a close above Tuesday. My next level, I will give a range because it's in trailing mode, but if it gets above the 62.5 and there's a nice rotation play up, it could be a short-term play. And my next zone is 40.82 to 40.95. And then I will play for 41.31, 41.31 to 41.80 key topping area. Now, on a weekly basis, if we got to 75, does that mean it's a weekly potential double top? I'm going to map this out. And we're going right at the 75 level, okay? And Even back to the daily, you see the second and third targets. Now, interesting enough, I will not be trading this if it does come to that 70 and stall out. I will still be paying attention to this breakdowns, but I cannot use the double targets. Interesting though, what would the double target be? It would be to retest these lows. Now, if this does, because there is another double pattern, a potential double pattern I am watching, especially if we break back below 3,800, what will be my target? First target will be 3680 area, and then the next target will be about 3585 area. Those will be my targets on a breakdown, because that would also potentially trigger a double on a different chart. So those will be my targets utilizing the weekly chart. The 200, which we cannot ignore, and this key support area. I'll bump it up a little higher, 35.85, 35.90. So those are the levels I'm watching. By the way, on the weekly, we've stalled out against this 50 area. This is really key. Doesn't mean it can't poke above it. But I am watching in this vicinity for a topping pattern. We are overbought. We have cycles at the top. On the weekly, we still have area for it to run, but we could go through a cycle pullback on the daily and another rotation up before we get a major weekly top in. On a shorter term basis, so I said there's trailing mode. Is this a double? No. I was watching for a potential head and shoulders, but that was taken off with the strong push into the close. So, pullback tonight, I'm going 39.92 to 4,000. My key line, the sand where I start watching more substantially for a pullback, is below 39.70. All right, Microsoft's on the 24th and Apple's on the set. Apple after the Fed announcement. Interesting. Interesting. That's a little later earnings for Apple. Huh, or it says 21st. Well, all right, we'll have to verify this. Wonder what this says. Let me just glance to see what, not that this is the end all and be all of they're wrong a lot, but this, they have it the second still. All right. So back to the S&P real quick with the bigger pattern stuff. The key line in the sand that I went over on the Futures Ed podcast, still this 43.70. Everything stays in tactile mode until we get a weekly close above there. Especially with the number of people rushing in saying the low for the year is in and we're going to new highs. The only one I'm really focused on with potential new highs is the Dow. Let me just jump to the Dow right now. Why am I jumping to the Dow? Because if the Dow comes up here, even if you don't trade the Dow, it's handy to watch patterns. 34,593. If we hit 34,600, that hits that level. It goes beyond it. Why? That would set up a valid double top in the Dow. That's what I'm watching for. And it's valid on the Dow, even if you use the aggressive. It's not here yet. It has to go higher still. But look, that could take it back to the 200-week moving average area. Would that trigger? So that's going to be one. If we push above 34,600, I will keep a very close eye on the Dow. Okay? That's going to be very key. Short term, target 34,593 to 34,600. Then 34,910. For all the longer term players, yes, we did close above the 62.5, so we should see still, if this continues to march higher, we still have the probabilities that the Dow could test the high range from last January. Okay? NASDAQ. And I want you to keep this in the mind too, because with all the rah-rah stuff going on, look, the NASDAQ is still in the dumps. You know, this has a lot to do to get through before it can really start to get, I mean, even it doesn't change much, even on a 340 rally back. Right now, we're getting to the flattening out rotation zone. But it's trail mode. Trail mode, there's no key topping pattern. We are stair-stepping with waning momentum and divergences. That's why it's in trail mode. What's the next level I'm watching for here? 11,743.50 on a closing basis, and that would be on at least Tuesday or later. Get a close above there. I will still be utilizing it because the nature of these markets, with it's how overbought it's getting, the target I would be using is 11,942, and then the 87.5 coming in at 12,140 with the declining 200. So that would be my major target area. But for reward to risk, I would be using the 11,942 to make sure my trade is structured with appropriate reward to risk. On a pullback, nothing really changes, at least in the short term, until we're at least below 11,350. So 11,350 is the first key area I'm watching on any pullback. We'll get to crude. Russell, which has gone completely bonkers mode and did close above the 62.5. And I brought this up with Sterling for anybody who was attending the live stream on Friday. Again, 75, 1935.70. That is the target. Now you see the Russell on the daily, the 200 is right back at a key prior resistance, now becoming support. So my key level that nothing changes on unless we get below it is 1833 on the Russell. The Russell, yes, this is still a massive double bottom pattern. If this were to trigger, it would put us squarely in bullish mode on the Russell. Russell trading against key resistance going into the beginning of next week, right here. And then you start getting a move up there. You still have remnants of a weekly clear path. So we look at the daily and we notice some key stopping points. So before that, 1935, 1919 would be definitely stop raise area, 1935 key target. Next key area, 1963, and then the 1984. The DAXI, very overbought, cycles at the top, watching for a overextended, this is not a key topping pattern just yet. It's turned more into a sideways break, but I will be keeping an eye on 15,100 for a potential rollover breakdown. It's very overextended from the daily rotation zone. Notes. Besides, I'm talking, this is, going to watch for the follow through on the remaining pattern here from that double. But it's in trailing mode, trailing stop mode for this. And I would be aggressive trailing stop mode. That's the only thing I'm keeping an eye on until that pattern finishes. And yes, this is still a massive potential topping pattern. Let's just double check things. I need to remind myself. I believe it still works. Yeah. And no, it doesn't. Sorry, it does not. I will still be watching that pattern for a key reversal of from that breakdown point. Other than that, there is not a fantastic pattern. I'm expecting notes to pull back and then possibly take out the 200 or hit that 200 area. I'm watching for still a pullback and then another potential push higher. The key levels to the upside, though, still are in place from the reverse harmonics 115.25. And then the next target area is roughly about 116.04 to 116.07. Let's get to crude real quick. Crude, we still have the potential double in place. It is at cycle tops and overbought. Nothing changes, and it doesn't even validate the pattern if it pulls back to 76.80. I'm watching for a pullback play after potentially hitting 80.37. Okay, but if this, as I said, if the double triggers, it would be a patient entry because it's so overbought. This, I believe, would give multiple chances to enter. So it would not be a rushed entry on the double trigger, or I should say it's still potential. It's not even confirmed yet. But it would not need to be a rushed entry, and look where that could potentially take us. Back to the 200. And back to this two top area. Not double top, two top. So that would be very interesting. I think that could be another fantastic play if it does trigger. What else? China's companies with a lot of exposure to China could be at risk with COVID breakout exploding since COVID zero ended. Oh, yeah. Would the ES monthly chart be considered a double bottom since both bottoms were in 20? Would the monthly ES chart? I got a monthly chart right here. Would that be considered a double? No. The monthly would not be a double. Why? Because the second and third targets are beyond the candles that started the move. And that's taken from the conservative target. So no, it would not be a double. No double. Where else do we have? Let's jump back to the dollar index. By the way, natty gas, potential double bottom. Remember the potential buy signal on the daily did not close above there, so nothing there. Slammed in the rotation zone and then rotated back down. We might be getting another little potential double, but we'll check on that. Other than that, we just broke pretty key support. So this could get interesting to the downside still in natty gas. The dollar index is holding its in the long-term key area for a potential reversal. Trading against major support right here. Even major support down to 101.10. I am watching for a substantial bottoming pattern being put in. There's not one yet. Not one yet. And that could take us back to the weekly rotation zone. And it does not have to happen here. If it does hit lower, especially if we break down below this 101.10 level, 100, just 116 cents is the next key level. So 100 and then 98.75. But anywhere in here is a potential bottoming area. Let's get to, here's what I'm talking about with the 10 years. If you don't trade it, keep an eye on this, because if the Bank of Japan has to shift its policy again, it gets substantial. It's now held above that 50 basis point for 1, 2, 3, 4, 5, 6. That one might have closed just below it, but roughly 5 out of 6 days. And that's with their insane bond buying. If they shift, remember, my trade of the year is short the US dollar, Japanese yen on rallies. It's coming back down to a very key area. Not just because it's the prior major support, but this is the 50% run-up from the lows of January 2021. We could easily, before this year is up, retrace it. Look at the head and shoulders target. And look at that 200 on the weekly. And the 75% harmonic. Do not ignore that one. I'll be watching for, depending on, again, the Bank of Japan meeting on the 18th. If they don't change anything and reiterate their support for that 50 basis point peg, we might get a bounce. But now, major resistance is all the way down to 130.65. Euro is in trail mode. No key topping pattern just yet, but support back at 107. There's just not, besides it be trailing mode to the long side. The 50% harmonic from the highs back in January of 21 to the lows of September of this last year is 109.42. So if we do tap that out in the next few days, the upside, I will be watching for a substantial topping pattern, at least a substantial short-term topping pattern in the euro. Pound has nothing going with it right now. Bitcoin, which went into stupid mode this week. If we do get through 21.5, again, there's got to be no news that's going to drop. The wash trading went insane the last few days. But 22.402, I'm waiting for a rug pull in Bitcoin again. Where else do we sit? Gold. Gold squarely in trailing mode, closing above the 62.5. Would not be surprised to see if we get at least a short-term dollar bottom kicking in to see a pullback in gold. But after that pullback, we should still see 1963, then a return to above 2,000. Silver, so far, has worked off its overbought by a sideways correction. Sideways correction, letting the weekly rotation zone catch up. If we start breaking below about 23.30, I'll start watching for the pullback in silver, but that would just be to within the weekly rotation zone. Silver, the key level you're watching on a closing basis is 25.50. Copper, again, is in trail mode. The final target. What's interesting is the final target. You got to close above there. It could stay in bullish mode after a pullback. But if it does close above the 62.5 this week, I would be very patient with waiting for a pullback entry for another push higher in copper. So that's where we stand. If I was going into this week with key things, my key things I am watching for, I'm keeping a major eye on crude, Keeping a major eye, whether you trade the futures or the spot in the US dollar, Japanese yen. And then it is into the US stock indices. Those are my ranking of things I am watching, and also then the dollar index. That's what I'm really focused on this week in terms of futures. I'm not going to keep anybody longer than they need to be with this session because we got overseas. It's your bedtime coming up over there. And in the U.S., we have some playoff football going on. So, not going to waste anybody's time. And I will be back tomorrow. We'll see, based off the overnight futures and the trading through the European close tomorrow, if we have any more definitive setups to anchor on Tuesday. And if there's any stocks we want to look at, we can go through those tomorrow afternoon. Until then, thank you for tuning in. I will talk. Ooh, I was out of camera there for a part. Oops. I got so wrapped up with the analysis, I didn't. I wonder if my camera shifted. There. Okay, right there. That's better. Okay. Thank you for sticking around, and I will talk to everyone later. Bye.